Today's analysis is for educational purposes only. All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business, and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis.
Here we have the Aussie dollar, US dollar. My bias is clearly bearish on this pair. So I'll just go through the relevant support and resistance areas. Of course, we have long-term resistance up here, recent resistance rather, around the 66740 area. We have resistance through this 63050. This area here, as this area here as well, were both long-term support going back to 2008. That has now turned into resistance. Same with 59660 area. That was long-term support back in 2008, and just recently has been acting as some short-term resistance. Interestingly enough, with this recent low around the 55130 area here, that low was support way back in 1998. So 22 years, this area here has been support. So it's still acting as support, of course, but it'd be very interesting to see what happens. Should this area break, then obviously sub 50s is certainly not on the cards. But I would expect, last time price was hit this area here, again back in 1998, it bounced back up to this area here. So I would expect, purely based on that, a bounce in price somewhere maybe through this. If we get a close above this 5960 area here, which is previous support, then we could see price come back up to here. Now it'd be very enticing for many traders to trade the short-term upward movement should one present itself, because there's a lot of pips on offer. I probably won't do that because I'm a trend trader, I'm a swing trader, so I'll simply wait until we get a signal that we can actually trade. Very difficult on the daily chart, but again we'd look to the 4-hourly chart perhaps, somewhere here or somewhere here, but it's all going to depend whether this support area here today, because this is incredibly significant. So my longer term view is to wait for something to happen at either this level here, this 5960 level, or this 63050 level, or even potentially higher at this 66740 area or thereabouts, to sell this pair again. So for now, it's a wait and see game. Again, with the volatility of the market, there's no need to be doing anything. Really just wait for your opportunity to present itself. And again, very difficult to trade these just because of the amount of pips that are being traded per day to jump in on the daily chart. So we'll probably look to take advantage of the 4-hourly at some point. But my overall view is bearish, but I would expect, just to repeat myself, a bullish run, if you will, a retracement somewhere to these levels up here. And then when that happens, then if we get the signal, we'll go short again. Thanks, guys. Here we have the Euro USD. As I mentioned in last week's analysis, my bias on this pair is clearly bearish. I think that's obvious. That's coming off the back of this false breakout up here to the high side, which was resisted at a previous resistance area, long-term resistance area on the weekly chart. So what we have is previous support rather turning into resistance. But I'll just go through the relevant levels. These levels are still relevant because we are seeing 150 to 300 pip movements per day, not every day, on this pair. So quite an unprecedented level of volatility. So all these relative support, horizontal support and resistance areas are still valid in my view. So I'll just go through them very quickly. We have resistance here at 112.407 thereabouts, through here and through here. And in fact, it was these two candles here, this inside bar structure, which was the catalyst for the dramatic drop in price at that previous resistance area. We have resistance through this area here, a bit of a pop, around the 109.77, 110.977. We have support here at around the 109.886, and which is now turned resistance. Candle here, this bearish candle. Again, we have support here, previous support at around the 108.806 level, and then of course support here, which could very well act as new resistance at the 107.870 through this candle here. So what does all that mean moving forward? Well, simply from a price action point of view, we'll be looking to short this pair should we get an opportunity to enter the market. Now, it's all going to hinge really what happens around this 107.870 area over the course of this week. If we get a close above that, then we will simply wait if in fact we don't get a signal, or of course price could pop back off this level here and act as new resistance. Therefore, if we got a sell signal here, we would enter somewhere around there, and we'd look to retarget around the 105.20 previous support of the 103.30 area. Or of course, if we get a price action signal around this previous support area, this previous support turn resistance area here, then that would allow us to sell on more strength, but it's a bit too early yet. But so from my perspective, we'd be looking to enter the market somewhere preferably in this range here, to allow us to target probably somewhere down here initially, but further down to 105.30 or the 103.30 area. So consequently, of course, should we get a break above this level here, this recent support, then that could capitulate prices back up higher to these previous support turn resistance areas, and we'll take full advantage of that. Maybe not on the daily chart, almost impossible to trade this pair on the daily chart given the volatility, but we would drill down to our 4 hourly and see if an opportunity presented itself. So for now, I do have a bearish bias, that's obvious, but we will wait to get in at strength depending upon where that opportunity presents itself. Cheers. Here we have the British Pound USD. As we can see over the course of the week how aggressive price has dropped. Now, as per my analysis last week, I am bearish on this pair, but I won't be trading it anytime soon. So I'll just go through the relevant levels, a bit of a recap of my previous analysis. It really started to capitulate once price again bounced off this resistance area here, 132, 108 area, which is really the top of a range bound area had been trading in for quite a while. Then of course we had previous support down here through here, which really was the base of the range bound zone. So it was through this bearish candle here down. So every support level now has been nullified. Firstly, this one here has been nullified by this candle. We have previous resistance here at 125.800 or thereabouts. We have previous support down here at 122.093. Again, that's all been nullified, and support here at around the 120.211 or thereabouts area again, which has been clearly nullified. So all these support levels, well, they still could be valid because we're waiting for a retrace, but clearly you can see they've all been totally nullified to the point now this 1.18253, this blue line here, that was the most recent low in history on this pair. So we are now in, or at least recent history, we are now in uncharted territory with price coming down to this 3. So really we're in no man's land essentially. So also the volatility of this pair is just off the charts, pardon the pun. You can see on Friday through this candle here, there's a 500 pip movement in one day. So even if you did find a signal that supported your edge, you have to take into consideration that on any given day, this pair can trade 500 pips. So the chances of you getting stopped out are obviously increased greatly. So I'm in definitely no hurry to trade this pair at all. So what I will be doing, of course, as I always do, I'll trade with the trend, but not until I get a significant signal, maybe around here, it's 120 or up higher, at these previous support levels, which have turned resistance. If we get a bounce off these back in the direction of the trend, then we'll judge that on its merits. But for now, I'm in no hurry to short this pair at all. So it's going to be interesting to see what happens here at the recent low. Now, of course, price goes lower and higher than you quite often think, and in fact has done that. So I'll just wait and see what happens. But I would expect, well, you would think, a bit of a pop off this area here, being we are in uncharted territory, uncharted waters. And if that happens, then we'll take advantage of that and we'll sell this pair on strength. But definitely no need to be trading this pair, in my view, at the moment. Thank you. Here we have the New Zealand dollar, Japanese yen. My bias on this pair is bearish, as long as price stays contained below long-term resistance here at 73.297 or thereabouts. Then I have a bearish bias on this pair. Just to recap what price has been doing, for quite a while price was trading in this range bound zone between 66763, again thereabouts, and 70019. And you can see here we had resistance here at the bottom of the range bound zone, support here rather, and we had resistance here at the top of the range bound zone. This price then broke through this range bound zone, rejoined a recent high, creating this resistance here. If you go back further in your daily time frames, you'll see that this resistance has been in place for quite a while, and came back down and formed a new resistance area here, which was the top of a short-lived range bound zone. And then of course through this candle here, it broke through the support of that range bound zone to join the dominant downtrend. So what has happened since then? Of course, we had this inside bar structure here, multiple bar inside bar structure formed just here at previous support at the bottom of the previous range bound or consolidation period. That was the catalyst for price falling. And as you can tell since then, price respecting the EMA, you can see it's been trading within the two EMAs and bouncing off the lower EMA. So we would look to short this pair, retargeting this 59.505 initially, but we would probably either wait for price to come back up to here, or if in fact that doesn't happen, then we will use the EMAs, because the EMAs right now acting as dynamic resistance. So we will wait for an opportunity to present itself either on the daily or the 4 hourly. Again, very volatile, so we will wait for an opportunity to present itself. In this instance, I would think, in the absence of getting a significant retrace, then we will use the dynamic EMAs as they're supposed to be used, and we'll wait for a signal to form within the EMAs. You can also see the strength of this, just visually of course, but the gap between the EMAs. So there's a lot of momentum here, you don't need me to tell you that. You can see here this gigantic bullish pin bar failed to do anything, so the bears are well and truly in control. So again, we'll wait and see, we'll wait and get our opportunity, but I think on this particular pair we'll be trading it based upon the EMAs, because we use them as event areas as well, of course, unless of course we get a significant retrace back up this level here in the meantime. But I will let you know what happens in due course. Cheers. Here we have the New Zealand dollar, US dollar. Again, my bias in this pair, as per previous analysis, is bearish. I'll just go through the relevant levels. We have this support turn resistance area here at 64853 or thereabouts. We have obviously longer term resistance here at 67515, and we have resistance through here around the 64450 level. We have support turn resistance here at the 63261. It was this inside pin bar combination that formed, which formed a new event area, a new resistance area at this level, and that was the catalyst for prices heading down. We have previous support, which of course has been nullified here at around the 61936, and we have resistance here at 61249 and 59660 area. These are resistance on the monthly charts. We have some resistance here short term, and they also coincide with longer term resistance on the monthly chart. So these two areas here, in my view, are important. Then of course we have the recent low here of around the 54680 area, acting as support for now. Interestingly enough, this 54684 area was long-term support back in 2009 on the monthly chart. So it'll be interesting to see what happens at this level. If this support level holds, then we will simply wait for a price action signal to form somewhere between these two resistance areas here. I would call this a sell zone, or even perhaps potentially up to the 61936 area, but this area here would be a sell zone for me. So if I got a signal in that area, that would spike my interest. Conversely, of course, should price close below this 54684 or 680 area, and then that would open the floodgates to around the I think around the 49540 level, which would not surprise me at all. So this area here, if this holds support, is significant, but nevertheless, as always, we'll look to sell this pair on strength, and we'll bide our time until an opportunity presents itself. Again, if we get an opportunity on the daily, or we see something on the daily that spikes my interest at around this area, then I will look on the 4-hourly chart to see if in fact we do have a setup on our hands, and if we do, we will short it and we'll retarget initially the recent low, should we get the opportunity, around the 54680 area. Here we have the USD Japanese yen. My bias on this pair is still slightly bearish, so I'll just go through the relevant levels first. We have up here, mentioned in previous analysis, a new resistance area of 112130 thereabouts. That was created as a result of a false breakout. We have resistance here at 110717. This area here is significant in my view, because it's long-term resistance on the weekly chart, and was also at this level here, this inside bar set up just here, that create a new event area, a new resistance area, and was also the catalyst for price capitulating back down. This inside bar area here that was rejected at longer term resistance on the weekly. So this 11070 area is significant. And then of course we have previous resistance, which was really the top of the range bound market that this pair had been trading in for quite a long time. We have support all through here, resistance turns support, obviously, of the range bound market, which has turned into resistance here again through this structure here, and most recently here. And then we have support just below that at around this 107820 area through here, and more recently through this bullish candle just here. Then of course we have previous support down here at 104,460 or thereabouts, through this area here, and more recently this very bullish candle here, and then of course the most recent low of around the 101,210 area through this area here. So what does all that mean? Well, simply from my perspective, this, as I mentioned before, this 110,710 or 717 area thereabouts is significant. If we get a close below that, and in fact a close below the top of this previous resistance area here, or this previous consolidation period, then that would be an indication to me that price could very well, that could open the floodgates to price to come back down, certainly to at least this first support area around about here somewhere, and then potentially much lower. But that's a wait and see game, of course. But my overall bias is slightly bearish on this pair. It's all going to depend on what happens below this 110,717 area level and this 1110 top of the range bound area. Again, if we get a close below that, and if we get a price action signal, then we'll base it on its merits and most likely retarget around the 107,820 area, or again the 104,460 area, or thereabouts. But that remains to be seen yet. But that's my overall bias on this pair, slightly bearish, and we'll just see how it plays out. Thanks.